Nebius just posted the wildest quarter in NASDAQ and they jumped about a third in less than a day. There's something they're hiding from us, and we're gonna dive deep into their financials and figure it out. So here's what the filings say that the release don't. 781 million, which is their entire half year's profit, came from a company that they own named ClickHouse, from a funding that they didn't even join. 97.6 is nearly their operating cash flow from customers paying in advance, which can be refundable at any time. 43 million is just from the cost by increasing the life of their servers from 4 years to 5 years. And 54%, which is their two largest customers, were replaced by three other customers, which now carry 59% of the revenue for the company. And 157 million were sold by insiders, and they made zero purchases in the open market. So revenue's up 454%, and it's still losing money. They made 582 million, and their adjusted EBITDA is 236 million. They did have 176 million operating loss, but the really crazy thing is that they paid 119 million in just an interest bill and spent 5.7 billion in equipment, hoping that they can recover that cost and revenue in the next quarter. Here is the 18 times revenue in 8 quarters. They've drastically increased and went from negative 143% to positive 41%. But that doesn't mean that they're going to continue this growth, because their guide for December 2026 is 7 to 9 billion dollars. That means they would have to double in what they're currently doing to be able to meet their guide by end of this year, which is in less than 2 months. And like I mentioned earlier, 37.5 billion of their contracts are already signed, but that doesn't mean that's the money that's sitting in their account and they're able to realize that as profit. That just means they have signed contracts which are refundable at any time. So where does the operating cash flow really come from? The operating cash flow is from customer repayments, from running the business, and 97.6% of its customers are paying years ahead. Most of the cash is not theirs. In the filing, they made the quote: the group recognizes deferred revenue when cash is received and before performance obligations are fulfilled, including amounts that may be refundable. So it's very important to note that this amount of money that they're holding is not only refundable, they're also paying interest to their customers. So think of this as just a loan from their customers, and they're just having to make repayments on interest as they're holding the cash to purchase more equipment and grow. So, one sentence in January that flattered every 2026 number: 43 million of depreciation removed from this quarter alone by deciding for the servers to last 5 years instead of 4. And disclosed effect covers only equipment owned before 2026. So, when they increased the length, it was able to help their bottom line. And without it, the quarter's loss would read 224 million instead of 190. And that's what people mean when they're cooking the books. The entire top of the customer list has changed. The two customers that were holding about 54% have now completely disappeared and been replaced by three other customers, which now hold 59% of the revenue. So 157 million of stocks were sold by insiders, but they bought back $0. As an investor, I would be a little concerned if the insiders, people who are actually working actively with the company, are selling their stocks but not rebuying any of it in the open market, because they may not have faith in this company. And note, these aren't just directors. This is the founder, the CFO, and the CTO, which are reselling their stocks in the market. Nebius is 5.8 times the price of the closest rival, compared to Oracle, which is sitting at 5.7, CoreWeave at 5.6, and Amazon at 3.5. Analysts are penciling a deeper loss, not profits. So full year of 2026 estimates were negative 3.91, and it's just grown year over year, ending at full year of 2028 at negative 4.82. So it's a great business, just the wrong price. With the recent breakout, it's been overvalued for what they actually are able to sustain a financial model for. I personally think they are somewhere around 173, while they're currently trading at 277. But before that, a couple of key points of what we just went through. The growth is real. Revenue's up 454%. The cash is not earned yet. 97.6% of the cash is from customers that can claim refunds anytime. The profit was just a paper markup from a company that they own named ClickHouse of about 781 million. Insiders sold about 157 millions, and that includes the founder, CFO, and the CTO. And last but not least, even Michael Burry is shorting the stock, and we all know he's famous for shorting stocks that are overextended. And based on the charts we're about to look at right now, this stock is very overextended. So here we have the charting for Nebius. If you're interested in learning how I do my technical analysis and the indicators are used, go ahead and comment indicators, and I'll walk through exactly how to use my indicators for swing trading and be able to have a pretty high win rate. So as you can see here on the chart, we went from $184 all the way to 277, sitting at around almost 45% of increase in the last week. I'm going to go ahead and turn on my indicators to show you guys my technical analysis, and we'll walk through it. You could see there's a triple top here with resistance holding at around 226. We were able to break out of that here around on August 12th after the earnings call and continue this run all the way to $277. There is a potential for two options here. One, it could have a reversal and go back to this 50 SMA for bounce and let the market kind of equalize to what this company's worth. Two, it could have a breakout out of this $290 mark, and then another potential breakout of this psychological number of 300 for another run. So how would I evaluate this chart? If we're able to get out of this area here and hold at least 1 to 2 bull or green candlesticks, it is a potential that we may touch this $300 mark, and then if go on another run for another 10 to 15%. But that doesn't mean that there's a potential for a reversal. Institutions can buy up the stock and have essentially a fake out for a liquidity grab and reverse this back into this 50 SMA and let the market reevaluate exactly where the stock sits. So what am I doing? I'm actually waiting. I'm going to wait for another couple of days to see if we're able to break out of this area where all the sellers are sitting at around 290. And if not, there is a potential for reversal. If I see any sort of red candlesticks closing below this 277 area with at least 1 or 2 4-hour sessions, then I will buy either a put option for the next 45 to 60 day, because I know there's going to be a lot of volume getting into Nebius given how quickly it overextended, and there is a potential for a pullback in the next few days. And that's all I have for you guys today. If you enjoyed this video, go ahead and like and subscribe. And if you're interested in me doing any other analysis, go ahead and put the ticker in the comments and I'll review it next week. Also, this is not financial advice. It's just educational purposes. And if you have any questions or comments, feel free to drop them below. I'd love to learn and understand how you guys are trading this specific stock.